What's going on, everybody? It's Big T with GreenWallSt.com, back with another live trading video, quote unquote live. I recorded this last week on MMAT, and just coming back to do some commentary over it and kind of walk through my thought process and why and how I traded it. So essentially, somebody in the Green Wall Street Discord actually just brought this to my attention. I wasn't even watching it off the open, but stock was up, 15%, and it was really moving. As you can tell, 3 minutes past the open, we ran from 560s all the way up to 630s. And at this point, my goal is just to not try and find the top. It was a good quote in Reminiscences of a Stock Operator trading book. If you guys haven't read it, definitely recommend it. But it says, I forget exactly what the quote is, but essentially it says the first eighth and the last eighth of a move are typically the most expensive. More traders have lost more money trying to find the top and trying to find the bottom of a particular move than any other point in the move. So my goal as a short seller is just don't try to find the top. Who knows if it's going to go to 630 or 670 or 7 or 9 and halt up and you're fucked. You don't know. So don't try to guess it. You got something like GLSI or SPI or Kodak or GME or AMC. Eventually you keep trying to guess the top on something and you're going to get burned. And that one that you get burned will wipe out all of the wins and then some. So you can't do that. And by waiting for something to top, of course, I'm never going to, top tick something and get the absolute best price, high of day. Sometimes I get high of day fills, but I would rather take less risk and have a higher probability trade with a set risk reward than try to get the top of a move. Who cares if you get the top or not? So at this point, I am waiting for MMAT to fall. I'm waiting for it to top, waiting for sellers to show up. And then as the stock bounces back into that what just happened? Came out of my mouth? I don't even know. As it bounces back into resistance, that's where I want to be short. But I got to make sure the stock is top. So we got one candle, it's 2.1 million shares. But I'm not convinced at this point. So I'm not going to, just jump in short because it could reclaim the trend and go to 650, 660. And I don't like losing money. So I'd rather be more sure. So just fast forwarding a little bit, you can see now the stock is full from 640 all the way down to 6, even touched 590s. And now as it bounces back into resistance, really that 610 to 625 range is where I want to be scaling short. And I think I was shorting 2,400 shares, 2,500 shares. So the way I, try to get my full position on is scale. Normally, I'll take a half size position and then try to add more higher or lower, just depending on, the action. But fast forwarding a little bit, you can see the stock starting to bounce. I take some at 610 just because I'm not sure if we're going to bounce any higher than that. It's tough to get the exact price that you want all the time. You just don't know. That's part of trading, right? That's why being sized appropriately is good because, you're able to sit through these little micro swings, that don't necessarily and shouldn't necessarily stop you out of a trade. But if you're oversized, then those small moves will stop you out of a trade. If I was already short 2,500 shares, or if I was short 5,000 shares here, or 10,000, I'd be freaking the fuck out right now because I'd be down on the trade, right? And especially as we bounce even higher, right? And we go into the 620s, I'd be shitting bricks. But you don't want to be shitting bricks when everybody else is shitting bricks, if that makes sense. It takes a lot of screen time, but you need to see how these moves reverse and where everyone's stops are. And you need to wait for their stops to get ran before moves typically reverse. So, we're exhausting into 620s, running stops. You can see the volume. You can see the people trying to buy a breakout. The people, who shorted the lows are stopping out. They're freaking out, thinking 650s are coming. You need to be emotionally strong during that point in the trade. And the only way you can do that is to stay patient for the best entries and not be oversized and taking too much size. And then just fast forwarding, I'm not going to make you sit through all of this, but stock starts to show some weakness, starts trying to bottom around 590s and 6. So you can see me zooming in and out, kind of trying to keep the bigger picture idea in mind, which the stock was going to make new lows. That was my idea. We'd flush out to 580s, maybe 570s, and that's where I would cover. So now everybody that was, buying 610, 615, 620, as we break these lows, you can see the volume start to pick up here. That's because everybody is stopping out of their positions. And that's the liquidity that I want to use to cover mine. So I want to use their stops as my profit target, if that makes sense. So shorting into shorts, stops, covering into long stops, taking advantage of the FOMO traders. That is the name of the game. GreenWallSt.com. We are running a 5-day free trial, have been for the entire year. You can sign up for free, spend a week inside the room where we go through these trades live. I show you how to find them. You can watch the educational material for free. Walks through all sorts of stuff and how to set up these trades, where to enter, why the risk reward makes sense, how to calculate edge, all sorts of stuff. So sign up again for free for a week. If you decide trading's not for you, you can cancel risk free, and no harm, no foul. But either way, thank you all so much for tuning into the video. Hopefully you found some value in that trade. Pretty simple thesis, simple idea, but trading is simple. It's not easy, but it is simple. So once again, hope you enjoyed the video. Thank you for tuning in, and I will catch you right back here next time. Peace out, everybody.